I'm here with Jim Cramer to talk about the markets. Jim, so far an early bounce back. What are you going to be watching for today?
At 11:30, we have to watch to see whether the market peaks as it did last Tuesday after that big down day. Between 12 and 1, we're going to see some margin calls because there's speculators that won't put up cash. That could cause some pressure between 1 and 2. If that's the case, then, and we repeat last Tuesday's pattern, which is what I think could happen, you're going to be in for some rough times. So why don't you just wait until after 2 o'clock before you make any decisions about whether to buy this market?
And Jim, as you pointed out, yesterday was just one of those sell-offs that was almost hard to kind of wrap your head around.
Well, why not? I mean, China, the data was bad, and so people knew the data was good and bad. It was bad and within expectations. Europe was down, not down as much as we were, even though the dollar was weak versus the euro, so that made no sense. It was a retest. Now, they're from last Tuesday and Monday's lows. There are 500 stocks in the S&P, obviously. Now, 70 violated their lows, okay, but only 30 violated their lows by more than 1%. So some people regard that as successful retest. The technicians are in charge here. Please read Bruce Kamich. He's been very, very negative and very right.
Jim, you were looking at some retail stocks yesterday. What were 5 retail stocks that perhaps you have your eye on now?
Well, Action Alerts owns Target, and I just think that Target is now down dramatically from when they blew the number out, but then gave a, let's say, tepid guidance in order to temper expectations. GameStop did the same thing, a fantastic number. Paul Raines decided to listen. I'm not going to move the bar up so much that you should be encouraged. He gave you an under promise so he can over deliver. Best Buy was really dramatically positive, and that is a housing play, and I really liked it. I've gone over Dollar Tree with a fine-tooth comb. This stock is now down from 83. When it gets in the mid-60s, yesterday I said mid-60s, 65, you want to buy it because they've now reduced expectations really, really dramatically. And finally, Walmart at 3% yield, watch that. If that can't hold, that is not necessarily a sign of how bad Walmart's doing. That's a sign of how much retail's hated.
Jim Cramer, thanks. I'm Rhonda Schaffler for The Street.